Hello students, let's do a multiple choice question on bonds payable. The use of interest method results in a periodic interest cost that represents a constant effective rate of interest on what? All right, so you guys know that discount or premium on bonds payable is amortized using the interest method. And this interest method results in constant effective rate of interest. But this constant effective interest rate is on what amount? Is it on the fair value of the bonds payable? Or is it on the amount of bonds payable outstanding, or present value of the bonds payable on the date of the borrowing, or face amount of the bonds payable? So this periodic interest cost represents a constant effective rate of interest on what? How you calculate your periodic interest cost? So you multiply constant effective rate of interest and amount of bonds payable outstanding. And what is this amount of bonds payable outstanding? It is face amount of bonds payable reduced by unamortized discount. In case there is a premium, you add unamortized premium. This is outstanding amount. So this interest method results in a periodic interest cost that represents a constant effective rate of interest on the amount of bonds payable outstanding. Constant effective rate of interest. Although the amount of bonds payable outstanding changes every year, it will change every year, amount of bonds payable outstanding. But effective rate of interest will not change. It will remain constant. The amount of bonds payable outstanding changes every year. And product of these two, constant effective rate of interest and amount of bonds payable outstanding, is what you recognize as interest cost, what you recognize as interest expense every year. So answer is B. It represents a constant effective rate of interest on the amount of bonds payable outstanding. It is not constant effective rate of interest on fair value of the bonds. It is also not the constant effective rate of interest on the present value of the bonds payable on the date of the borrowing. And certainly it is not the constant effective rate of interest on the face amount of the bonds payable. Periodic interest cost is the constant effective rate of interest on the amount of bonds payable outstanding. All right, students, we'll connect again. Goodbye.